So I'll tell you a little bit about our exciting new discovery that we've had and some things that we're up to for the next 6 to 12 months as we move Bellevue into production. Of course, normal forward-looking statements as well and disclaimers for everyone to read in their own time, which will be said during this presentation. And so it's been an amazing discovery. We drilled our first hole only 3 years ago on the project. We hit 7 metres at 27 grams per tonne on a brand new load, pretty much from surface. And since then, we've grown our resource at about 70,000 ounces a month, month in, month out, every month right up until now. We're currently at 2.7 million ounces of gold at a fairly impressive 9.9 grams per tonne. And that grade has been consistent in every resource statement that we've put out since then. We came out a few months ago with a bankable feasibility study. So to go from being first drill hole only 3 years ago to coming out with a bankable feasibility study in that time is fairly rapid and something you don't normally see for projects in the resource sector. So we've grown it rapidly. The feasibility study that we came out with shows that it's going to be one of the largest gold mines here in Western Australia. It's going to be in the top 25 mines in Australia at the moment. With some of the lowest all-in sustaining costs at around about $1,079 all-in, Australian dollars that is, and with one of the highest margins in Australia as well for a gold mine. The resource is very much open. I'll be explaining that as we go along. We've got 9 drill rigs turning. There's 7 on surface. There's 2 underground. 2 of those rigs are doing grade control drilling, and I'll talk about that in a little bit as well. The grade control, of course, is a really important part as we de-risk the project and move it through to the next stage of development and into production. We're very blessed. This project produced almost 1 million ounces of gold at 15 grams per tonne when it was operating in the 90s before it closed down, and then it was closed down with no work ever done on it until we got back on the project only 3 years ago. And so what that does for us, it gives us this huge competitive advantage. It gives us 28 kilometres of underground development that's sitting there. And so right now we're already 2 kilometres down that decline. We're 200 metres below surface, and we're moving closer and closer to the start of the ore body, ready for first production, which will be around about Christmas next year. The other thing the project's blessed with is the metallurgy. So a lot of this gold falls out in gravity. So of course, with high grade and with high gravity component, what that means is that, your all-in sustaining costs are low. And of course, that means that you've got a high margin project. And the way we've gone about designing our feasibility study is that we are all about margin. So it's profitability is what we're about. And our plan is to be one of the most profitable, if not the most profitable gold mine in Australia. And so a snapshot of the company, we currently have about $116 million in cash, so plenty of cash to see us through for the next 12 months or so as we move into that development stage. And everything we talk about today, that is fully funded. We have a pretty amazing shareholder base. It's institutional, it's global. We're backed by the likes of BlackRock and 1832 and one of the biggest gold funds in the world with Joe Foster at Van Eck, and they're just below 10% shareholding. So some really strong supporters, and of course management and the board own a big chunk of the company as well. And in fact, every shareholder in Bellevue, every person who works for the company has got shares in the company as well. And so it just shows that we believe in what we're doing and with full faith. The other thing to take away on this slide is, the share price growth over that time. And obviously it's gone from being, just a junior brand new discovery to where we sit now, and the upwards trajectory of that share price over the last 3 years has been great. We expect that to continue. It's all on the back of de-risking and growth and news flow, and that's what we have done, and that's what we're going to continue to deliver on. And I guess the real takeaway from this one and the next slide I'm about to show you is that there's opportunities to buy at the low, and hopefully you can see that on the way through. And clearly at the moment it's a great buying opportunity. And this slide, I thought I'd just throw this in here. It's an interesting one. It's a lot of you have probably seen this one. This is the classic: what happens to people's or companies' investment or share price and market cap growth over time from when you become an explorer and your discovery sort of growth phase through to turning it into development and then pouring gold and becoming a producer. And of course, the power of production is great, and your valuations change from being a PNAV type valuation to a EBITDA valuation once you become a producer. And of course, here we are at Bellevue, we're probably trading, and you'd have to talk to the analysts about it, but we're probably trading around about 2 times EBITDA on the forecast and what we're going to be doing on our stage 1 production. But once you're in production, that multiple goes up to somewhere between 5 and 10 times EBITDA margin. So you can see there's a big uplift that happens. And what we put in place at Bellevue 12 months ago was a dual track strategy. A lot of companies get caught up in just turning your discovery into production. However, we're very much focused on growth as well. And so growth is a big part of what we do. We discover gold at about $20 an ounce. So for every $1 million, we spend $20 million to get there. It's some of the cheapest discovery costs that you'll see in Australia and around the world. So it's huge value add for us. We've got $20 million budgeted for the next 12 months. And you'll see, as I've said, it's 70,000 ounces a month in, month out is what we do on this project. And we expect to see that continuing. So what will that do? Well, it's like a coiled spring, I guess, for the share price. And in theory, you should see, a rapid increase on the back of both discovery and growth, as well as moving it into production. We've got a great team that we've built over the last 18 months as well. I won't go into too much detail on the board of directors and as well as management team, but a couple of key people on this. We're lucky to have Amber Stanton join us today as legal counsel. She's part of, got a long track record of building mines and being involved in construction of mines as well. We have Craig Jones, who's our Chief Operating Officer. He's come across from Northern Star 18 months ago and was one of the key guys there in building mines and development. So a good, safe pair of hands on getting this into production on time and on budget. We have Luke Gleeson in the room as well, who'll be able to answer questions after this if anyone's got any. Again, from Northern Star, 8 years there of taking the company from pretty much nothing to where it was. We also have Rod Jacobs, whose track record of building mines is paramount as well. So, of course, we're located in Western Australia, great jurisdiction, one of the best for mining. We've got granted mining licences. We sit on the Goldfields Highway. It's daily flights in and out of Leinster and Mount Keith, and it's only a 4-hour drive down to Kalgoorlie. It's a 30-minute drive from the airport of where we're based. So it's got all the infrastructure that you need, and you're going to be seeing us in a few months' time coming out with that investment decision and going ahead with the build of the project. And as I said, we're almost 2 kilometres down that decline as we speak, as we get closer to where the ore body sits. But this is an amazing gold district. Have a look on this map and see some of the major gold mines that sit in the area. You've got Jundee, which is one of the best gold mines globally, just to the north. You've got Thunderbox just to the south. You've got Goldfields with Agnew Lawlers only 30 kilometres away to the south. So this is a really well endowed classic Archean lode gold system district, and Bellevue is one of those classic Archean lode gold systems. So the feasibility study that we put out a few months ago, and remembering this is stage 1 feasibility study. So this study was done and the cutoff date was November last year. So everything we've done from November last year is now being put forward into an upgraded, bigger and better stage 2 feasibility study. So all the drilling that we've done since then with the 9 drill rigs turning and optimization we've done, you're going to be seeing us coming out very, very soon with that upgrade. And what's that upgrade going to mean? Well, it's probably going to mean that there's clearly more ounces coming in because we've already done one resource upgrade and there'll be a second resource upgrade coming out shortly. But what that's going to mean is probably bigger and better when it comes to production and profile as well. The study was put together by some of the industry leaders. Everyone will be familiar with the names on the screen. Entech is obviously one of the major engineering groups here in WA that's had a long history of building mines and getting mines up into production as well. And when we put that study out, I think probably for me the real case, and we'll go through all the economics of it and what the project's going to do, and that's based on 7 months ago compared to where we're about to come out with in the next study. But probably for me, the real key takeaway in the whole of this presentation is this slide here. This study was put together with a huge level of conservatism into it. When we actually do something, we say we're going to do it and then we deliver on it, and we have done it. And that's what we've done at Bellevue, and we're going to continue to do that. So when Craig Jones, ex-Northern Star mine builder, puts together the study with Entech, this level of conservatism, you can see, we expect to be doing better than what we're actually putting out on paper. So the numbers you can see in here, so for instance, jumbo operating, we're putting in 250 metres a month. This is 20% below what standard industry is doing out there at the moment. All the numbers we have in our study are at about 20% below. And the reason being is because we're going to deliver on better than what we say we do on paper. And then this slide's already out of date, actually, if you look at it. I mean, leveraging the historic infrastructure point on here, it says that, we're down 1.1 kilometres down the decline. Well, we're actually about 2 kilometres down the decline now and 200 metres below surface. So, every day this project is getting de-risked, and it's getting closer to production as well. And when you look at a long section through the ore body from north to south, we're really targeting that top sort of 500-600 metres. So from surface, there's a small open pit at Tribune down to about 500-600 metres below surface. And we're currently, as I said, we're almost 2 kilometres down that decline. We have 2 rigs turning underground there already. There'll be a 3rd rig turning in the next quarter as well. We're already at the point where the Amand and Marceline 2nd decline is about to go in the offshoot, and we're about to make a decision and an announcement on that shortly, on that moving ahead as well. So we're well advanced. And the other thing on this de-risking, this grade control drilling, and you can see some of the results there that we've got at the top. We put this announcement out a couple of days ago. So this grade control drilling shows the excellent continuity that we have of the ore body. It's super high grade. It's drilled out on 10 by 10 metre drill spacings, and all these results are in the top 50 metres. So this is cream ready to come out on day one on production. You've got numbers like 5 metres at 76 grams per tonne, 5 metres at 31, 5 metres at 30, and the likes ready to go near surface. So we'll have a quick flyby through the project and get a bit of a feel. So it's multiple lodes, and you're looking from west to east here. North is on the left-hand, on the side closest to me. And so the resource, as I said, it's 2.7 million ounces. It's grown from nothing to 2.7 million ounces in that time. The blue is the indicated category. The yellow is the inferred category. And what we're doing is basically stepping out into that yellow area and converting the yellow into blue. And you'll see that indicated resource increasing in this next study. And of course, indicated category means that they can go straight into reserve category as well. And you'll see that increasing as well in this next upgraded study. All the development from the Feasibility 1 put in there, everything is fully costed in those all-in sustaining costs. There is no other growth capital or anything like that. Everything is fully capitalised in the study. The new area that we've recently had the success in is called Marceline. We have that a decline going out to that. We're about to go starting to get out to that shortly, and you're going to see some growth coming out on that soon. There are 28 kilometres of underground development you can see there, and as I said, we're about 2 kilometres down that existing decline. The amazing thing that it does for us as well is the underground drilling that we can do. So instead of drilling from surface, we can go underground, and we already have 2 rigs now working from underground. It's a third cheaper, it's a third quicker, and of course it's a third more cost effective. So we can drill things out much more rapidly and progress this a lot quicker as well. The upside is unbelievable in this project. I mean, when you look at this slide, look at this image here, that's every drill hole we've ever drilled to date. There's 300,000 metres. There is nothing drilled outside of where those main lodes are. The first 2 deeper holes that we've poked into the project, which were co-funded by the West Australian government, hit the ore body at about 750 metres below surface with 2 significant intersections. So you can see this ore body is going to carry on at depth. It's open in the footwall, it's open in the hanging wall, it's open north, it's open south. So this is a big Archean low gold system that's going to continue to grow. And as I said, going back to that original slide, that dual track strategy is, is super important to us, and the fact that we're growing the resource and we're moving into production. So you can see a lot of upside to go on the project. And so when you step in and look at the feasibility study and the numbers, it's going to produce 160,000 ounces a year. And this is on the previous study from November last year data. And as I said, we're already 7 months of more drilling with 9 rigs turning. We've already done 1 resource upgrade, and there's another one going to be coming out shortly. So you're going to see these numbers increasing on the next study as well. So we'll be moving up this ladder, I'd imagine, in the next study. The all-in sustaining costs in the lowest quartile. It's some of the lowest you can get in the country, and some of the lowest you can get globally as well. And again, it's because of the high grade, it's because of the really good metallurgy we have as well, and of course that competitive advantage with the underground infrastructure in place as well. Green and gold, that's our motto, as well as profitability. And you can see us here, we are at the lower end of the gas emissions in Australia. That's a really important thing for us. We have a young population working for us on the property. Investors looking for ESG incentives and what companies should be doing to decrease their emissions. And you can see here we are projected to be one of the lowest emitters in the country with mines. And of course the grade is very, very high. It's second highest ore body in Australia, and we expect that to continue like that while we move into production. And of course, as I said, this project, the feasibility study that we did a few months ago and the one that's coming out shortly, it is all designed around profitability. That is our focus. We intend to be the most profitable gold mine in Australia, and you can see here from the projected EBITDA multiples that we'll be doing, it's without a doubt one of the most profitable out there. And what does that mean? Well, it means that it spits out cash, to be quite blunt. We're going to be spitting out close to $200 million every year. It produces almost $600 million of free cash flow in the first 3 years, and there's probably very, very few mines being run by junior companies that do that. And don't forget, that's based on stage 1, and stage 2 is coming out shortly, so it's going to be bigger and better than that. And don't forget as well, this study was done on a gold price that's $100 less than what we're sitting on now. So it really is quite a remarkable ore body. It's it's been hidden away. Nobody's done any work on it for 30 years. It's just been such amazing growth that we've had in that time, 70,000 ounces month in, month out. That will continue to grow with those 9 drill rigs turning. We've got exploration growth, you've got infill drilling, you've got grade control drilling. You're going to see that reserve or indicated category growing. You're going to see the reserve category growing, and you're going to see the overall inferred category growing as well. And what does that mean? Well, it means that you're going to see longer mine life coming out as well on the project over time. We've only really just started. So we're very lucky in the fact that we've got grade. As Paul said at the start, a lot of gold mines talk about their 1.5 gram ore bodies. We're very, very fortunate in the fact that, we're 10 times that, at being close to 10 grams per tonne. It's a large ore body now. We're moving up towards 3 million ounces, and you're going to see it growing from there. Everything we do is all about profitability. This mine will be one of the best, most profitable mines in the world with an amazing growth profile. And that dual track strategy that we have of spending money on exploration and growing it, as well as de-risking and moving into production, you will see a big re-rating happen over time. And of course, ESG is at the forefront of everything we do. We plan on being, one of the greenest mines here in Australia. And of course, we are cashed up with $116 million in cash in the bank at the moment to do this. We're talking to about 13 debt providers at the moment, and you're going to be seeing us announcing something on the debt piece in the next quarter as we look to fully fund this project. So thanks very much for your time.